Hello and welcome back to the Note. Well, we now know already that yesterday was indeed just a dead cat bounce. Almost all the gains you saw in markets on Monday have been reversed on Tuesday, and it's easy to see why. That's because China decided to devalue its currency overnight by 1.9% against the dollar. As a result, oil fell, industrial commodities fell, developed world stocks fell, and Latin American stocks, particularly exposed because of their exports to China, also fell. Nothing in that was particularly surprising, and nothing was particularly alarming. It's very important to say this did not take us into any new ranges. Generally speaking, it just reversed the rather strange bounce we saw on Monday. To see why it's not yet such a big deal, let's take a look at the last 10 years, and you can see that the age when China held its currency artificially cheap against the dollar has long gone. In fact, it's been intervening to keep its currency up of late. What is more important is that it has tied itself to the dollar, and as the dollar has been strong in the last year or so, that has had an effect on Chinese competitiveness. Particularly here you'll see against the euro. As the dollar has strengthened against the euro, so China has become very much less competitive when it comes to exporting to the Eurozone. The Eurozone has become very much more competitive when it comes to selling things to China. How much will that reverse? Very important to see. Also, if we now take a look at China's great traditional rival, Japan, you can see that the steady appreciation of the renminbi over the last decade, it had almost no effect on the balance there until the arrival of Abenomics in the last 2 years with the dramatic weakening of the yen. Suddenly, China's competitiveness compared to Japan has weakened drastically. So what will determine what happens next? I think there are two critical questions. First of all, we can forget about whether China is having a soft or a hard landing. It's obvious from the way the authorities are behaving that this is at least a hard landing. We now need to ask whether it's a hard landing or a crash. If we see an outright decline in Chinese GDP, which is certainly still not a central forecast, but you can imagine it, you can see certain measures which are trending in that direction, then plainly we have a lot further to fall. If we are merely talking about a hard landing, then we're not in an area where there will be a significant further devaluation. The second question is borrowed perhaps from discussions we've all had about Brexit and the Eurozone. Will this devaluation be orderly or disorderly? Now, so far, China has been extremely orderly about the way this has worked. Ideally, if their economy really is slowing down severely, maybe they want to devalue by as much as 20 or 25% and do it over a matter of years. If they can do that, if they can keep control, that can be assimilated by world markets. If, however, there is a sudden stop in China, if there is a financial crisis, if they lose control of the situation and you have a disorderly devaluation in a hurry, perhaps accompanied by aggressive devaluations by other countries around it, that is a very ugly scenario indeed for the rest of the world. So those are the two questions, hard landing or crash, and orderly or disorderly. Finally, the inevitable question these days, will the Fed raise rates in September? That has become somewhat less likely as a result of this latest news. It's still very much a possibility. Final clear point is that uncertainty has been ratcheted up.
China's currency, much like the country itself, was for decades something of a mystery in the financial world. The renminbi, which means people's currency,